3, 2, 1. Welcome to the jungle.
All right, here we are. So this is going to be a little bit of a different show than usual. I'm on travel this week, and so we're recording this a little bit early. And we're going to talk through some things that I think people are going to like. If you're not a subscriber to our paid service, this is going to be your chance to have a look and see what you actually would get if you were a subscriber to our paid service.
First of all, if you're not a subscriber, I don't know why.
Yeah, I don't. I mean, at this point in the game, I mean, so to like in full disclosure, it's Monday. The I fund, the F fund, closed below the June low, the prior low last week. This week, as of today, well, as of Friday, the Dow Jones Industrial Average closed below the June low. As of today, the S&P 500 closed below the June low. The June low is the line in the sand. If you are wondering what you should do, if you're wondering if the stock funds are going to go up from here, you shouldn't be wondering about that.
Yeah. And first of all, like if you watch this show to get the TSP Weekly up, the charts, the weekly charts, we're going to talk about why that's only a little piece of it. And what Jerry actually does for members is he goes way deeper into the analysis for the week. And so way more useful information actually comes out in the weekly newsletter as opposed to what we do in a short little snippet on this show. Right. So let's get rolling into it, man.
At the end of the day, what you get as a paid subscriber is you're going to, if by the end of this show you don't see the value, I don't know what else we can tell you. So what do you get as a subscriber to the site? The weekly TSP newsletter. That's what we're going to do down here. We're going to show you the example from September 11th, that newsletter that came out on that Sunday. Okay, that's going to be at the end. So you get the newsletter. It goes into much more detail than we do on the weekly update show. I also do what we call a walk and talk. It's basically a video walkthrough of that newsletter. A lot of people have found a lot of value in the walk and talk.
Yeah, because there's a lot of folks that learned from reading something and seeing it, and others that hear it and see it and that kind of thing. I personally like the walk and talks. I mean, I of course hear everything that Jerry's going to talk about, but if I'm going to go look at the newsletter, truth be told, I have it on my phone. I hit the video and I listen to his walk and talk. And that's what I need. And I would say if that's all you did, the least amount you did, you could easily manage your TSP account weekly by just listening to Jerry do the walk and talk. Because he's going to tell you all the important information you need to know. Now, if you really want to dive into the charts, you really want to kind of get, then the whole newsletter's there. It's it's a document you can
go back and look at it. The charts are there.
Absolutely.
I put up the charts on the walk and talk also. So it's a video. I'm going through the slide deck that I do for the newsletter. So it's definitely worth taking a look at. We also have the members only webinar we do every month. We try to do it around the first week of the month. We go through our results, right? Because we put out alerts. If you had followed the alerts, where would you be? What would your rate of return be for the year? That's really the big focus of the monthly webinar.
Yeah, and it's great. We walk through each alert that we did, why we did it, and what we think, not think, but like what pattern is that showing us? So between the weekly newsletter and then the monthly webinar, and again, we record the webinar, so if you're not able to come live, the benefit of coming live is you can ask questions live.
Right.
To us directly. It's more like a meeting than it is a webinar. We just do it in a webinar format because it's easier that way. But you can ask us questions live. We kind of talk through things, and if you have questions on subjects that we're not even talking about, that's your opportunity. Yeah. But members basically get our kind of one-to-one time with us during that webinar, and we get huge rave reviews from that from people that see it live. Of course, if you can't see it live, then you can always watch it at your leisure, recorded. But
then you send in questions. If you have questions from what we did in the webinar, you send them in,
and then we can address them. Prep them before the webinar.
Yeah. We have the members only section on the dashboard, which has basically everything you need to know in the dashboard in one place.
So you don't have to really go hunt around, a lot. If you go straight to your member dashboard when you log into the site, so let's say you're a paid subscriber, you just go to your dashboard. The alerts there, the latest allocation analysis, alert analysis, the latest newsletter, the latest show, the latest everything. Yep. It's all right there in one spot.
And it's in the app.
Yeah.
So there's a huge difference in the app. If you have the app and you're not a paid subscriber, if you subscribe, the app opens up a whole new thing.
And it's all really handy. And we are completely overhauling both the app and the website, honestly, at this moment. And so any day it'll all be, and we're constantly doing that. Honestly, we will never just kind of leave it alone. We want to keep making it better because we take feedback from folks and say, hey, wish we had this, wish we had that. And so what we're going to talk about next is this this kind of members only social community, right? And right now, when we recorded this video, that members only kind of social community, we use a Facebook group for that, but we're merging away from that so that we can be able to offer a lot more tools in that social community, and it's actually going to be on the site and in your in your app, in your mobile app. And so what that means is you won't have to go to Facebook if you're a member to be a part of that social community. That's one thing that we've had a lot of requests for, because a lot of people in the government, a lot of people in the military are kind of shy about being on a regular social media platform.
Yeah, especially
and even
Facebook.
And even if they are, maybe they can't have access to it because they're behind a firewall at work. And, so we listened. And, it's taken about a year to kind of find a product that will work for that. And we're building it with developers. But the bottom line is you won't have to go to Facebook for that, for your members-only community. And not only that, but you'll have more tools as we kind of grow that out, pun intended. So I think people are going to really like it. It's not quite ready to turn on, but it should be just in a couple of weeks. And that in and of itself, I think, I'm a little biased because I'm the one helping develop it. But I think that alone, just having that at your fingertips on a mobile app, is well beyond the worth of the price of the subscription, because you get to talk to like-minded people about learning all of this stuff, and going back to the fact that we have the actionable alerts, which is what you're going to talk about next.
I mean the alerts come up, right? You get a regular text message, you get a push notification in the app, and you get an email. So if you're in a SCIF, if you have a way for us to work around a SCIF, we're all for it. But having spent plenty of time in a SCIF, both of us, I don't know a way to get around that.
Yeah, I mean, you just have to accept that, just about every work day, Monday through Friday, generally speaking, if the market's open, right? If the market is open, and this would be, I think, regardless of whether you were one of our subscribers, you have to get your trade in by noon of that day to get that closing price.
Yep.
So you really only have around 9:30 to 11:30 to get all that figured out. Yep. Well, guess what? That's what we pay Jerry to do, right? So he does that every day. Every day, he's figuring that out between 9:30 and 11:30. Now, we usually try to get out the alerts well before that, and the key is a lot of times we'll probably know where we're sitting the night before.
Yep.
We might need a few more data points the next morning, but if you just step out to get a cup of coffee, again, going back to the whole SCIF thing or whatever, whatever your environment is, I mean, if you can't check that, then there's not much we can do. But if you about that time of day, hey, if I'm going to make a trade, this is when it's going to be. It's a 5 or 10 minute thing. You're ready to log into TSP, ready to make a move, and bam, it's good.
And you can hit tsp.gov right from the app or from the site, and so you get the alert, the alert analysis, the whole rationale for why I did the alert comes out usually after the close of the day, that day. But most people, if you're following along, you are anticipating an alert when it comes.
Yeah, that's important. Most people that are actually following our newsletter and coming to the members webinar each month, they are doing exactly what we do, right? And so they're looking at the weekly charts and they're kind of expecting it. Yeah. The beauty of this alert is not really telling you what to do with your money. It's validating the decision you should already be making, which is, I see that it's dipping below, or the volume is here, the RSI, the MACD, and if all these things sound like French to you, that's okay. After a few weeks of watching us and watching the newsletters and doing all of that, you'll understand what we're talking about, and it's not that difficult. And so, to Jerry's point, you're actually just going to be already prepared. Like, hey, I'm taking a look this morning, looking at the futures, see what's going on.
Yep. So yeah, and then when it comes right down to it, like I said, you get a text, push notification in the app, which is really the best thing, because as hopefully people understand and appreciate, when we put out text messages and emails, they get stacked. So once, I make a final decision about making a reallocation, it goes over to Conan, who starts this process of getting this information out to everybody, and it gets pushed out on the server in stacks, and it takes time.
Yeah, it usually takes about 20 minutes for it to really get through everything. But we are, over the years, we've gotten a little better at getting that out. But really cool thing is the
push app.
Yeah, the mobile app gets it out immediately.
Yeah, once we make the decision and we put it out on the app, it immediately comes out. Yeah. And there's a link in there to tsp.gov, and you hit it, and you do the new allocations, and that's it.
Yeah, and the new app is going to be even better at all that, because it gives us more options. So that's going to be cool.
Okay. So that's kind of the pitch about why y'all should be a subscriber. So what we're going to do here is an example of the newsletter from September 11th. So it's relatively recent, okay? But it's early kind of in this correction that we've been having, okay? So if you guys remember, you remember back to the show 3 weeks ago, September 11th, okay? We did a deep dive into the seasonality analysis from Larry Williams at stockcharts.com, right? Talked about Larry Williams several times throughout the year. This is a composite chart that he put together showing the average price movement in the years ending in 2 in a decade, going back to 1952, right? We've shown this chart several times. We showed how 2022 was actually following the average in general, right? It's got a rough first half of the year. Okay, it's basically, flat to down for the first half of the year on average. This year was much more down than usual, but on average, it's down to flat. We have a bottom out in the summer. We have a pretty good rally in August into the beginning of September, and then a big correction in September. Okay, so we showed that how 2022 is actually following the average in general pretty close, right? So this correction in September, ideally, would bottom out above the summer low, okay, and set us up for a huge move higher in the fourth quarter in years ending in 2. That's the average, okay? So also in that show back on September 11th, we pulled out 9 charts of those individual years ending in 2 to see how each year performed versus the average. So there was a ton of good information in that show. If you haven't already seen it, you should definitely go back and check it out. You can see it on our YouTube page. It's Grow My Thrift Savings Plan on YouTube. It's not Grow My TSP. It's Grow My Thrift Savings Plan on YouTube. If you were a subscriber to the site, you of course had access to that free content that we put out on YouTube, right? You also got the newsletter that gave you details of how this scenario, right, the Larry Williams scenario would play out, what supported the scenario, and what it would look like if 2022 did not follow the average, okay? So if you weren't a subscriber back then on September 11th, here's what you missed. Okay, so this is essentially word for word, and I'm gonna add a few things, but this is basically exactly what the newsletter said. After 3 consecutive down weeks, the TSP stock funds finally caught a bid, right? Because this is where we were, okay, back then, and this was the week, so it was a great up week, okay? TSP stock funds finally caught a bid. C fund ended up the week 3.65%, S fund up 4.88%, I fund up 3.26%, F fund lower by about 0.5%. Is this a confirmation of the rally that began off the June lows, right? Back here, is it a confirmation of the rally? Is it simply a correction to the prior 3 weeks of price decline, right? Which was this. Here's the prior 3 weeks of price decline. Is this just a rally correcting that? Or is a bigger pattern emerging? Okay. So those are the questions. So possibility number 1. If you believe that the final bottom of this bear market was completed in June, then this is your interpretation of the market, okay? The rally from the June low to the August high is a 5-wave impulse. So here's the June low. You would believe that a 1, 2, 3, 4, 5 to the August high was an impulse wave higher, okay? Followed by an ABC correction that would set us up for ABC correction to a 2, and that would set us up for this big 3, 4, 5 onto new highs. Okay, that's how you would see the market going forward in possibility number 1. Okay, and the Fibonacci retracement levels could support this idea, right? The rally off the June lows completed between 50% and the 61.8 retracement levels of that bear market. So from the high in January to the low in June, okay, this is the black Fibonacci tool that we're using. We retraced, here's the 50% level, here's the 61.8% retracement level. We finished right in the middle, okay? So given that scenario, it's possible, right, that was a 1, okay? And then the subsequent decline brought us back to 61.8 of this move higher here, okay, which is a very common retracement level for a wave 2. So the Fibonacci retracements were kind of supporting this idea that this was the 1, the major first move down for a 1, and then a 1, 2, 3, 4, 5. Okay, so the Fibonacci's were kind of supporting that idea. So if you saw the world as this was definitely the low and we were going to move higher, this is how you would see it. Okay? So possibility 1, right, was based on Larry Williams' seasonality analysis and one possible Elliott wave count at that time, right? So we showed how the Fibonacci supported this possibility. We showed the price targets that would either validate or invalidate. And we talked about how price, volume, and technical indicators should act if this possibility was going to unfold, right? So we know that if we get above this 43.15 level, then this wave 3 is happening, okay? This was a critical retracement level. If we get above there, then we're in this wave 3, right? If we get below this 2, then we're into a different possibility, which we're going to go to next, all right? So it gives you some lines in the sand. So I would say that's quite a bit of value right there. Then we move to possibility number 2 in the newsletter, okay? If you believe that this week's rally, which we're talking about right here, this week's rally, is simply a correction to the prior 3 weeks of decline, which was this, right? Then your theory is that we are still in an overall bear market and price will ultimately make new lows. If that's the case, then this is your interpretation of the market, right? The way it looks right here. If this count is correct, then that week's rally, this part right here, should be almost complete since wave 4, in the Elliott wave theory, wave 4 cannot overlap into wave 1. So if wave 4 can't overlap into wave 1, then this rally can't get higher than 41.28. Okay? So you know that if you don't get above 41.28, if the market rolls over, then possibility 1 is not happening. Okay? So you know that. Okay. At the time, if this was the newsletter came out on Sunday, and I was saying that 41.28 level could easily be invalidated the next week because price was moving higher. If price continued higher into the next week, we'd be up here, and then we'd be back into possibility number 1. But if it didn't, then here's possibility number 2. Okay? So in real life, fast forward to today as you're looking at this video, this is much more in line with what's happening than possibility number one, right? And you knew that because we did not get above 41.28. Okay.
Now, it's easy to get lost in all of the kind of Fibonacci and all of that stuff, right? And so, as the dummy on the panel, I just want to point out to folks, really, all Jerry's doing is kind of giving you all the information to kind of give you the credibility and validity, make it a valid, make it so that if you really want to know the why, but at the end of what he just said, like that 41.28 line, that's the huge takeaway.
Yep.
So what you should do is, if you want to learn the why, he's giving it to you. We're giving it to you in all sorts of ways. Yep. But you can also kind of go, okay, I don't know all of that well enough yet, but what I know is this is what I'm going to be looking for. Yep. Here's my line in the sand. Here's what I got my eyes on. And you don't have to spend minutes and minutes or hours, definitely not hours, looking at where the market is, right? Let's say you come out, take a coffee break, pull up your phone, go to Yahoo Finance or something, whatever your app of choice
see
is.
See what the price is.
Yeah, take a look.
And honestly, you don't have to do it during the day because these are all based on closing prices.
Yep.
So if you get home and you look at it and you say, where did the market close for the day? It closed below 41.28. Okay, it hasn't hit my line yet.
Right. Yeah, that's actually a much better way to do it. I mean, I just know that people look at it throughout the day, much like we do. But yes, probably the better way to do it is to do this on a weekly basis. And so you're probably not going to catch all of the, the highs and lows perfectly. You're definitely not going to. But what you're going to do over a career for sure is be on the right side of the market, which is what we're trying to teach you guys, is that's where you really want to be. You don't want to worry about this up and down. What you want to be is in the market when it's trending up and out of the market when it's trending down. And if you take a look once a day at the market, and definitely once a week, you can do that.
Yeah, you can definitely do it. What we're trying to do is identify the turn as closely as possible. So that's why we're looking at daily and intraday charts to try to determine as close as possible to the turn, because market timing, right? This idea of market timing. The idea of market timing is that you're predicting where the price is going to bottom. We don't want to predict where the price is going to bottom. We want to follow it to the bottom, and then once it turns, we want to identify the turn as early as possible. And so that's why we're looking at daily and intraday charts, not to try to anticipate when the turn is going to happen. We want to have an idea. We want to have some expectations. The technical indicators will tell us. Momentum will start to decrease. The downside momentum will start to decrease, which will anticipate a price move higher, which we want to know that. But we want to wait for the price to move higher a little bit, identify the trend change, and then get back in. And so that's how I spend my day. So in the newsletter, the third possibility. Third option is that a bigger pattern is emerging, right? It's not either we hit a bottom and go higher, or we just keep going lower. There was some bigger pattern that was going to emerge. And so this chart was taken actually from the August 14th newsletter, okay? So you might look at it and say, hey, we're talking about September 11th, but actually back here, this is the August 14th newsletter. And it's not exact. There are a lot of similarities between this chart and how the price has actually responded since August 14th. So wave A actually completed in early August, right? With your so whether your count was a 5-move impulse off the June low or an ABC correction to the June to August rally, wave A is over. So basically, what I was anticipating is some kind of, if we were going to get an impulse wave here, that would have been great. We would have had a 1, 2, 3, 4, 5. Okay, then some kind of B, then a C, and then a move down. Right. So these are the kinds of things we're looking at in the newsletter, where we're projecting forward what are the possibilities, but we're waiting for them to happen before we actually make decisions based on it. Okay. So that was the third possibility. And then when we updated that, August 14th one from the previous slide, this is where we were. So we still could have been, the A, come down to the B, and then have some kind of ABC to the C, and then still down. Okay. So those were still open possibilities at the time, but we never did get above that 41.28. right? That was really the line in the sand on the upside. So at the end of the day, in that newsletter, we said the short-term analysis, here's where we were, right? This was the September 11th newsletter. There's where we were. C-Fund closed above its 20-day moving average on that Friday, right? Just barely above that blue line, that blue 20-day moving average line. RSI was just barely above 50 right here, right? It was 50.94. CCI had not yet crossed the zero line, and MACD had not turned positive. Okay, so we said if those technical conditions got met in the coming week, the next hurdle would still be resistance at that long-term downtrend line. Okay, and we said September is historically the worst month for stocks. Could things be different in 22? Because again, this newsletter was based on the Larry Williams idea that September is a rough month, but it sets us up for a big move higher in October and Q4. So we said, could things be different in 2022? Yes, of course they could. Seasonality is certainly something to consider. Along with September being the worst month on average, the fourth quarter of years ending in 2 tend to be extremely positive. So all of these things require us to keep an open mind going forward, right? We could have had this move higher, right? So we had to be open to the possibility. But unless we got back above that 41.28 level, that possibility didn't exist, okay? So at the end of that newsletter, here was the bottom line, right? So how do we play this in our TSP accounts? And I laid out, here's my priority, what I'm looking at the time. So I'm watching to see if price closes above that 41.28 level. If that happens, then a short-term bearish count that we talked about is invalidated. If that happens, then we're either in the early stages of a new bull market or that larger corrective pattern that we showed. Okay, so those are the things. Those are the things that keep you from being emotionally attached to looking at your TSP funds, right? If you have an upside line in the sand and a downside line in the sand, you can go to work and at the end of the day come home and look at the price and say, okay, I'm still between those two numbers. I'm not doing anything. The next day, if you're above the high number, great. I'm back in the stock funds. If you're below the low number, great. I'm in the G fund already. I'm good. Like, you don't have to, wring your hands about what should I do, right? Okay, so if we're in the beginning of a new bull market, we're going to know it, right? So it's not just because the price closed above that level. If we're in the beginning of a new bull market, we're going to know it because price is exploding to the upside. It's a possibility given the chart pattern, but it's not consistent with the September seasonality or the underlying macroeconomic conditions, right? Because they're the same. Those macro conditions are the same as they are now. The Fed's raising rates, war in Ukraine, supply chain problems, all the same kinds of problems still existed. So while technically, in terms of technical analysis, it's possible that we had this big move into Q4, the macro conditions didn't support that, right? So you have to be open-minded, but you have to weigh all these things, right? If a larger corrective pattern is emerging, we're going to know that too, because we're going to get decreased momentum and decreasing volume as the price moved higher, which means there's not a lot of power behind the move higher, so it's probably not a new bull rally, right? And we're going to get it along with a series of ABC corrective patterns versus a 5-wave powerful impulse move higher. So that's really how you know whether you're in a new bull market or just a corrective pattern. Price is essentially in no man's land between that 41.28 and the June low. Until price closes below the June low or that August high, we don't have confirmation of a direction one way or the other, right? So there you go. You are in no man's land. So my intention is to ease into the stock funds if all those technical conditions were met. I would increase the percentage into the stock funds if price, ultimately closed above 4,300, which obviously it didn't do. So we stayed in the G fund. That's why, we did not issue an alert anytime recently because we're below all these levels. And we said it's a tough market. Even before you take into account the TSP restrictions, the 2 moves a month, if you're going to try to maximize gains in this environment, you have to stay focused on the game. There's nothing wrong with taking the guaranteed but small gains in the G fund and waiting for the next primary direction to emerge. And so that's kind of the value of the newsletter. It gives you, it's not just, in the show, we do the 3-year weekly charts, and we show, hey, if it's below that 20-week moving average line, you don't want to be in the stock funds. If it's above it, you do want to be in there. But how do you really make decisions about what you're going to do on a day-to-day basis? This is how you do it.
Right. And that doesn't take long to kind of read through and watch the video once a week. Again, it goes back to we strongly believe that you should be able to look at the market once a day, once a week, kind of think through what your next week's going to look like, put your lines in the sand, and go on about your business.
Yep.
And you could manage your TSP effectively that way.
Yep.
Now, the value of having our alert allocations is it helps you validate that decision. So it's kind of like the teacher giving you the answer to the math problem, right? You're pretty sure you got it right, and then they give you the answer, and you're like, oh, yep, I got it. Okay, I got it. But you still have to do the work. You still have to kind of think through it. But it's nice to have someone give you a little bit, of a validation, right? And so,
and so if you recall back from a couple charts ago, this was possibility number 2, right? We had that 41.28 line that we never got past, and if we scroll forward one to today, here's where we are. I mean, this was September 11th, and that was like right here, and we never got above it, and we kept rolling over. So this is the scenario. I mean, I drew this out as the Elliott wave pattern, right? It's not going to come out that way. It's a model, okay? And that model is looking pretty much like this is as of,
especially
Monday.
If you zoom in a little bit, you could see it more. But at the end of the day, the trend is the same. That's what's most important. Not that the little zigzags are exact. It's the trend. We're always looking for the larger trend. Is the trend going down? Is the trend going up?
Right.
And we want to be on the right side of the trend.
Right. That's right. That's the bottom line. And so we have a lot of people now, right? Here we are. We are right at the June low. What should I do?
What you should do is read our weekly newsletter. That's the whole point of the show.
Weekly newsletter. Yeah.
Right. And
I mean, that's the point of the show. It's a very tough environment to be in the market right now. And can we go up from here? It's a possibility. Can we go down from here? It's absolutely a possibility. And the point is, we obviously meticulously look through and figure out, is it more probable that we're going up based on the technical analysis, or more probable that we're going down?
Right.
And so,
lots of possibilities, but we're trying to find the probabilities, right? And so at the end of the day, you either find that valuable or you don't, and that it's sometimes strange to me, but I guess obviously we're looking at it from different lenses, but it's odd to me when folks go, oh, why do you guys make this a business, and why aren't you giving it away free like so-and-so? And I'm like, well, first of all, so-and-so doesn't do anything analysis wise. Well, that's not true. There are a few folks out there that do.
Plenty of guys that do analysis.
Yeah. But I mean, I guess the amount of work that we put in this collectively, it's the only way to make this work is to make it a business. And if you don't understand how that works, then that's something we can do to help you.
Well, so here's I wish I had the exact stat, but if you Googled and tried to figure out in 2022 how many hedge funds, the percentage of hedge funds or financial advisors or wealth planners or anybody else that's actually positive for the year, there aren't many.
Right.
The percentage basis is less than 1%.
Right.
We're positive for the year.
Yep.
Even given the TSP rules.
Yeah. And that's not bragging. That's just...
It is what it is.
It is what it is. I'm not saying we're always going to be on the right side, but we've done pretty darn good, and I would say Jerry's done pretty good for 20 years, because that's how long, I've been following him. If you guys have never heard this story on the show, it's a good time to say it. I mean, I was sitting in a cubicle back in the early 2000s, and Jerry and I were working in the same office floor, and I knew that he did this, and I was like, yep, I'm going to subscribe to that because I don't have time to think about it. And for years, all I did was just kind of follow along blindly. But then I started to realize that this wasn't, that hard, at least from a kind of, basics and fundamentals. And I got more interested in it. And I said, you know what? And so we just kind of grew together. We had other, businesses together. And we were like, if there's one thing we want to do when we retire, it's give people what we didn't have. Yeah. All of those decades, 30 years that we were in the government and military, no one ever gave us any education. We're not trying to give you advice. We're trying to give you education, right? We're trying to teach you how to fish so you can go fish on your own, right? And here's what's even better about all this is if you take the time to learn this stuff, you can apply it outside of the TSP.
That's right.
We do. And if you think we're positive in the TSP, you should see what we're doing on the other side, because we have more tools and we have less constrictions. And so if anything, there's a larger value out of this where you kind of learn how to manage, and what we really focus on is retirement accounts. So, we really don't get into brokerage stuff too much because there's lots of tax implications, and that's personal circumstances. But I would say by and large, 401k, IRA, TSP, you can use this methodology and you're going to do really well. Your spouse, your partner, your buddy, you show them, they're going to do well. And so hopefully you guys, appreciate the educational piece and understand what we're trying to do. And the goal here is, of course, to get you to subscribe if you're not.
Yeah, absolutely. I think it's $25 a month or $250 a year. This week, today, the F fund was down 1.3% today. It's probably the biggest move in the last 20 years, one-day move on the aggregate bond fund. Mm-hmm. That alone, if you were in the L income fund today, you lost your ass today, today.
Right.
And it's fine. It's just that you don't even know it. Yeah. That's the teaching component of this thing.
Yeah, we're all going to lose a little bit sometimes. So that's not, it's not to ding on someone that's in the L income fund, but we really hope that you're there for a reason. Yeah. If you're there because you think that's where you're supposed to be, that's what, that's really what frustrates us, because we feel like, oh, well, you just don't know any better. Yeah. Right. And so educate yourself. If you like what the L funds do, then use them. But otherwise, just actively manage your TSP. That's what we're promoting.
Yeah. If you guys have questions, definitely hit us up, support@growmytsp.com, and sign up for the site. You're missing out if you're not.
Yeah. And anything, if you like this, if you like the show each week, just make sure you share it with your friends. If you don't like it, still share it with your friends. All right. We'll see you guys.
And if you have questions, send them.
Yeah, send them to us wherever you found the video. Hope you guys enjoyed it, and we will see you next week.
Out of here.
We're going to be traveling around.